Good day everyone and welcome. Here we focus on serious investment analysis, not marketing slogans. Today we'll examine why Palace Villas Ostra at the Oasis by Emaar represents a strategic, data-backed real estate opportunity and not just another beautiful project. The project, the Oasis. The Oasis is Emaar's $20 billion flagship luxury villa community launched in 2023, spanning over 100 million square feet in Dubai land. It is strategically located between Emirates Road and Sheikh Zayed bin Hamdan Street with fast access to Al Maktoum International Airport, which is 18 minutes away, 28 minutes from Dubai Marina and 35 minutes from downtown Dubai. Key features include over 3,100 standalone luxury villas, no apartments, no townhouses, ultra-low density with approximately 30 villas per 1 million square feet and over 25% of the land reserved for parks, lagoons, and open spaces. Central features include 100,000 square meters of swimmable, crystal clear lagoons, 3 meters deep. This is not another suburban development, it's a private island style living inland. Number 2, historical background, previous launches and pricing. We had Address Villas Tierra, the phase 1 launched in mid-2023 with 4 5-bedroom villas, starting prices around 8 million dirham for 5-bedroom. Built up areas of 5,500 to 6,000 square feet, an average launch price of 1,400 to 1,500 dirham per square foot. Now, Palace Villas Ostra, which is the phase 2 launched in 2025, has 4, 5 and 6-bedroom villas with starting prices from 13.1 million dirham for 4 bedrooms and a built-up area starting from 7,300 square feet, an average launch price of 1,780 to 1,900 dirham per square foot. Reasons for the price jump are the larger plots and villas, the prime lagoon front positioning, Palace Hotel luxury branding, and the higher quality specifications. In conclusion, the evolution reflects organic market absorption and segment uplifting, a pattern Emaar has followed in downtown Dubai, Dubai Hills, and Arabian Ranches. So in their own launches, they increase the prices from each segment that is being launched within the same community. Number 3, product details. Palace Villas. We're talking about 4, 5, 6-bedroom layouts. Built-up areas from 7,300 to 12,800 square feet. Private pools, landscaped gardens, rooftop terraces, staff and driver accommodation. So we have rooms and driver rooms within each villa. They have a contemporary resort-style architecture with high-end finishes, stone, wood, glass, and a full palace branding in action in the community. Now, most villas are directly lagoon-facing, offering private beachfront access. Number 4, pricing analysis. Palace Villas versus the market. At the launch pricing, we're about 4 bedrooms starting at 13.13 million dirham, 5 bedrooms starting from 14.5 million dirham, and 6 bedrooms starting from 24 million dirham. Prices per square foot vary between 1,780 and 1,900 dirham per square foot. If we compare the markets in April, May 2025, we'll see that the community average prices in the Oasis is 1,800 dirham for a branded lagoon, ultra-low density villa, whereas Tilal Al Ghar, for example, Alaya Gardens, is 2,000 to 2,300 dirham per square foot with partial lagoon access and a higher density. At the same time, we have District 1 villas at 2,400 to 2,800 dirham per square foot with an older stock, a high resale price, and similarly in Emirates Hills, 4,000 to 6,000 dirham per square foot, already aging villas and of course Gulf-facing, Gulf-focused community. In conclusion, the Palace Villas offer a better per square value than other major villa communities despite offering larger plots, waterfront living, and a new construction. Now let's compare the Dubai villa market trends with the historical data. Dubai Hills from 2018 to 2024 experienced 56% capital appreciation, whilst the Arabian Ranches 2 experienced 52% and District 1 experienced 65%. Now the luxury villa inventory has decreased by 19% year on year, with villas priced over 10 million dirham selling twice as fast comparing to 2022. This is because of the rising demand in comparison to the supply for these high-end villas. In conclusion, the luxury villa market in Dubai remains deeply supply constrained. What is the future value projection? Conservative versus favorable scenarios. The conservative scenario, we're looking at 25 to 35% price growth by handover in 2029 for the Oasis. Favorable scenario is looking at 45 to 55% price growth by 2031, aligned with Dubai's demographic expansion and infrastructure completion. For example, a 4-bedroom palace villa today at 30.1 million dirham, as I've previously mentioned in the video, is projected to resell by 2029 between 16.5 million and 17.8 million dirham, with a potential resale in 2031 of 19 15 to 20.5 million dirham. Let's look at the rental yield and ROI forecast. The Post Andover rental estimates a 4 to 5 bedroom lagoon villa is looking at 700,000 to 850,000 dirham per year in long-term rent, with the gross rental yield being 5.5 to 6.5% and the net rental yield being 5.2 to 6%. In comparison, if we're looking at downtown Dubai, luxury apartments, they're currently around 4% net ROI. Now, let's move on to the buyer profiles before, during, and after the handover and what we're expecting. In 2025 to 2028, we're looking at the off-plan investors. These are strategic buyers securing prime waterfront inventory. From 2028 to 2029, we're looking at the end-user buyers, relocating families and global ultra-high net worth individuals. Now, in post-2029, these are the secondary buyers. These are the new residents seeking ready trophy villas and people that just want to buy something to rent it straight away. 9. Future outlook. The Dubai 2040 Masterplan impact. Now, of course, we have Al Maktoum Airport, the expansion being 18 minutes from the Oasis. You have the metro expansion with new metro connections towards Dubai South, estimated by 2030, 2032 being finished, with stations only 10 to 12 minutes of the Oasis. Now, Dubai land is also growing rapidly, with business parks, education hubs, and retail being opened. The population target is 5.8 million residents by 2040. In conclusion, the Oasis is perfectly aligned with Dubai's future infrastructure and demographic growth. Now, let's look at a global comparison with London, Miami, Monaco, south of Spain, and the Italian coast. Now let's look at London, with the prime central location of Knightsbridge and Mayfair. Luxury villa house prices are looking at 6,000 to 10,000 dirham per square foot, the equivalent from British pounds. Now, there is no waterfront, very high stamp duties and property taxes. Similarly, in Miami, let's look at Fisher Island, Coconut Grove, Star Island. These are waterfront villas, 5,000 to 8,000 dirham per square foot, with higher insurance costs and tax complexity of the US. Monaco, prime waterfront property, 20,000 dirham to 30,000 dirham per square foot, but a severe shortage of space and extremely high entry prices. The south of Spain, Marbella, Golden Mile. Prime villas are 2,000 to 3,000 dirham per square foot, with lower liquidity and seasonal rental markets. The Italian coast, such as Portofino, Porto dei Marmi, Amalfi, waterfront villas are 3,500 to 6,000 dirham per square foot. And we have heavy regulatory restrictions and older stock, not taking into account the taxes that can reach up to 54% year on year. In conclusion, Palace Villas at 1,800 dirham per square foot offers free, full ownership of waterfront living, zero income taxes or capital gains taxes. Brand new construction under Emaar, secure, fast-growing financial center environment, with Expo City being very, very close by and it being the next DIFC. In relative terms, Dubai waterfront villas today are deeply undervalued compared to all other global luxury markets, offering higher rental returns and better future appreciation in a tax-free haven. Final investments thesis, concluding everything that we've been speaking about today. You're buying a rare waterfront villa with Palace Hotels branding. You're entering a competitive pricing compared to Dubai peers and global luxury hubs, and we're looking at benefit from Dubai's 2040 urban expansion, government-backed. This is with a target in mind of 25% to 55% appreciation potential over 5 to 7 years. And you're achieving 5.5 to 6.5 rental yields on waterfront villas. Thank you for watching the video, and for customized investment models, floor plans, and latest unit releases, feel free to reach out.